No more query based on the last session? Okay, so presuming no more queries, let me go for the next one. So far, we have been talking about the data, different type of data, when they are used, etc., etc. Now the question is, in accounting and finance specialization, mostly those, I mean, the area which we are working, we are well acquainted and we have the idea that quantitative data is the most important thing. And the data means we take, be it from Pravesh, be it from Bloomberg, Compustat, Capitaline, or whatever database you have, we are taking the different types of financial variables. And based on that, we are working according to our area. Now the question is, sometimes not the quantitative data, some text data becomes very important. Nowadays, the text data plays a vital role in the context of research. Now, those who are maybe new, those who have already done your research in various areas, you have some advantage as well as disadvantage like me. But those who are new, uh, you have to keep certain things in mind, that whenever you decide your research area and you want to work in the future, make sure, or you try to avoid the repetitive work that we have been doing for a long time. Instead of doing any kind of repetitive work, if you can identify some research areas, some aspects which are unique, which are of different types of data set, data structure, different types of methodology, the chances of acceptance will be higher. For instance, if I am saying, in the Indian context, if you look at the preliminary, I mean, maybe C journal, ABDC, B journal, or maybe sometimes A journal also, the existing framework, the corporate governance, earnings, when I'm talking about in this field, or governance variables, financial performance, if you can design your work, you will be able to publish. But if your objective is to publish in a better quality research paper, maybe a journal, maybe A star, maybe FT50, whatever is your objective, then you have to keep in mind that initially identifying the correct research question, correct research area is very vital. And those things are not difficult, rather we have to orient our mind in that context. For instance, I am talking about, I have been doing this work in earnings management and corporate governance for last 4 or 5 years. Initially, I was not at all interested in the field of corporate governance, but somehow I had completed I got some projects from Ministry of Corporate Affairs, Government of India. So while doing their projects, I got some interest in the field of corporate governance, and I thought, let me work in this area. So last 5 years, you can see, not more than that. Now, if you want to work in any particular field, if you can get some new idea, some new innovative data structure, new innovative research question, that plays a vital role. And that is what I am trying to discuss in this part. Now, the part which I am trying to discuss, I am not at all an expert in this case. But guiding my research scholar. She is working in this field. So I took some help from her, and I try to understand that what is actually going on and what kind of research you can do in this particular field. So just, you can say, this session, mostly I have not worked on that much, but mostly I am trying, I am also learning like all of you, and I would like to share some of my experience in this particular field. Now, in the second case, what I'm trying to discuss here is like this. Is it visible? Just it's coming. What's that? Just a minute. Is the PPT visible?
Yes, sir.
Okay, fine.
Yes, sir.
So here, what I'm trying to discuss here is earnings management in Indian firms and its impact on readability of textual disclosures. Okay, so let me give you a background of this part, then we will try to discuss this part. So far, if you see the first session that we have discussed about, we try to understand what is earnings management, how earnings management is done, real activity based earnings management or accruals earnings management. And then we try to estimate earnings management in the context of discretionary accruals. We have used modified Jones model, Raman and Sarun model, or Francis Eaton model, whatever model you are using. And then we try to establish a linkage that whether governance variables or corporate governance variables have any role in curbing earnings management or not. So we took some corporate governance variables, then certain control variables, certain institutional investors variables, certain ownership structure variables, and we just frame a certain regression equation, be it fixed effect, be it random effect, be it pooled, be it system GMM, and we try to find out this. So here, when we had done this kind of research, mostly we had relied on the quantitative data. That what is your assets, what is your earnings, what is your accruals, what are your profits, etc., etc. And based on that, we have tried to model that paper. But sometimes these textual disclosures become very much important. I don't know whether you are actually aware of this part regarding textual disclosure. Can you give, if any one of you, if you have done any kind of research in the field of readability of financial statements or textual disclosure part, can you throw some light based on?
Is it relating to earning chairman's statements in the financial reports, chairman's message?
Yes, yes, okay. So can you
Yeah,
give, yeah, go
and
ahead.
is it yeah, chairman's message, and as well as board of directors information about their thoughts on MDA, management discussion and analysis parts.
Yes, correct, correct.
Yeah.
So textual data, that part. Now, you have correctly mentioned textual data means some. So far, we have been using the quantitative data, be it profit and loss account, be it balance sheet, be it cash flow statement, be it other financial variables. We are just taking those data, extracting from annual reports or from corporate database, and we are using those things. But in an annual report, there are many other components. And in those components, companies, they mention, they give information about those companies, not only in terms of numbers, but in terms of languages, text, what I'm writing. Suppose I am fine, one, I'm okay. So those two are different things. Now, textual data means in the text part, when chairmen are writing his or her speech to the shareholders, when CEO is giving the speech to the shareholders, when board of directors report is reflecting something, there is a component called management discussion and analysis, MDA. So it's very crucial part about the thinking, what the top management is thinking about the present and future of the company. So that MDA part. So those are mostly textual. There are certain references of numbers, obviously, but mostly textual data, tone, what kind of tone I am giving, that I am hopeful about the future of the company, or I am not so hopeful. Am I trying to reflect something good, or am I trying to hide something wrong? So hide something bad. So this kind of textual data has become extremely important nowadays. So in case of earnings management, in case of earnings management, this textual part I am trying to explain here in this context. Now, while discussing about the textual part, okay, first of all, these are the flow of presentation that we will follow. LR part we will not discuss much because similar context, certain aspects we will discuss. The research design part is very important in this case, research question and the research design part. And also we'll talk about the empirical findings, conclusions, and other implications which we are getting. Now let me set the tone about the textual disclosure part. The first one, this earnings management, real activity based earnings management, accrual based earnings management, already we have discussed in the last session. Okay, so we are skipping this part and some basic aspects regarding earnings management. Now, first, what we are trying to do in the textual data, textual part, let me understand this. If you see that there are different corporate scandals from time to time, you talk about WorldCom, you talk about Enron, you talk about Satyam scam, whatever. If you see that in India, Satyam, the the after the disclosure of the information that Satyam computers had actually involved, it was the company was involved into some falsification of the financial statements disclosure. Then its share price reduced from 723 peak to just 11.5 rupees, and further 6.3 rupees later on, when Mr. Ramalingam Raju confessed that yes, the the company reported 5,361 crore, but the actual cash balance was 321 crore. So company somehow manipulated the financial statements. When we got that report regarding cash holding, this cash falsification of the cash position, automatically that was reflected in the financial statements. I mean, sorry, in the market, and the price of the company was crashed. Later on, Tech Mahindra acquired this company, so and so. That's a different part. Now, in this case, if you talk about this kind of scenario, here certain aspects I'd like to mention. Why I'm talking about this cash position? Because when you talk about textual data, textual part, readability of financial statements, I'll also talk about the what do I say? I'll also talk about the cash holding part. How much cash a company is holding, and what's the role of the cash holding, moderating role of cash holding in this case? Because cash holding plays a significant role in the case of earnings management. Now, in this context, let me set the tone in this way. The short-term computer part, introduction part, I am not discussing because already we have discussed. There are motives behind earnings management, why managers manage earnings. That already you have discussed in your last session, to maintain your sustainable stream earnings, predicting the meeting the expectations of the shareholders and analysts, and obviously the personal goals of the managers. Cash holding part that we would like to discuss here first. If you see the regarding cash holding part, there are several papers which have focused on the cash holding parts, and by and large, their important thing is that cash holding is very crucial in the context of earnings management. Okay, so if you see, just customarily to point out something, that the information asymmetry is very much responsible for an increase in firms' cash holdings part. Okay, that is reflected in different research papers. And degree of information asymmetry and the level of cash holding is very important. Means if you hold more and more cash, what kind of information you are giving to the shareholders? If your cash position is actually less, what kind of information you are giving to the shareholders is very important. If you see some of the papers, they find a positive association between the information asymmetry and level of cash holdings also. Okay, there are different papers, Shiva Kumar paper or Su and Chiang paper. So many papers are there in this context. Here, what I'm trying to mention here is that, let me talk about the last part, Chung et al. 2005. They document that firms with higher level information asymmetry prefer to hold lower amount of cash. This is consistent with shareholders monitoring hypothesis, which suggests that managers are not allowed to hold larger amount of cash in opaque environment, so and so. Now let me talk about this cash holding part here in the case of Jensen part. In Jensen 1986, he mentioned certain interesting aspects, that owing to agency conflict with the shareholders, managers may act as an agent to maximize the principals, means shareholders' welfare. Further, the agent may indulge in self-servicing acts like misappropriation of firm's resources. Here lies an important question, and here I would like to mention this example I have mentioned, example Apple's financial policy, HBS case study. Please, this is not a part of this research. Ignore this line. This line I have written just to remind you one important aspect in this context. So while we are talking about the cash holding part, let me explain this in this way. Cash holding means, generally, so far we have been thinking that when a company is holding a lot of amount of cash, what the company is doing with that cash. Now, for the first time, Robert Kaplan, who wrote a case long back, which is published in Harvard Business Review. Since we don't have the permission, I cannot show you this case here. In the title of the case study is that financial policy at Apple, in Harvard case study. We teach this in MBA course and executive program course. It's very crucial. I would like to highlight this part. If you see this financial policy at Apple in HBS Kaplan we have mentioned, and later on in a very recent study, Professor Ashwat Damodaran, I don't know, you may have heard his name. Ashwat Damodaran is considered to be valuation guru at nowadays. He teaches at Stern School of Business, New York University. Valuation, he is a master of valuation all over the world. Fantastic professor at NYU. Now, he first introduced the concept that cash trust. He focused rather on the concept of cash trust nexus. What do you mean by cash trust nexus? Suppose Apple is holding huge amount of cash. So when Apple is holding this huge amount of cash, then uh, Apple is not the owner of the cash. Apple is holding on behalf of the shareholders. So shareholders are the owners. So when a company is holding a lot of amount of cash, the company has to earn that trust that on your behalf I am holding this cash. So naturally, if shareholders are happy with that, that okay, you are holding the cash and we are assured that you'll be doing something good with this, so we are okay with this. But in case if you cannot earn that trust from the shareholders, then shareholders will create pressure on you to return this surplus cash to the shareholders. That's called cash trust mixes. So what I'm trying to say is that companies do not hold cash. Companies do not own cash. They 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 keep cash, or rather they hold cash on behalf of the shareholders as custodian. Now here there is a story. Let me any query? Any query?
Professor, may I interrupt you? Sorry to interrupt you at this
Please, please,
stage, really.
please.
Uh, because mm, uh, this was observed. I mean, I'm an investor in the markets, so
Mhm,
especially in case of companies like Infosys, from long number of years, I am observing about this concept of cash trust. They are
mhm,
holding huge amount of cash in their balance sheets.
mhm,
So definitely, investors' point of view, they expect a good amount of dividend. It may be of interim dividend or a special dividend or any type of bonus they'll expect about it.
mhm.
Against this company is not doing this exercise, but company is trying to do acquisitions which are minimal in nature. Maybe to what extent it's strategically that help them as investors, we don't know. But the acquisitions are not so consistent with the company's growth. So, in what way we should understand this concept of cash trust? Because this is not only with Infosys in Indian companies, because largely we are, as we are moving away from the topic of dividend and companies are indicating for buyback issues in the Indian scenario, like Western companies. So, in what way the Indian investor should understand? Because, especially, I feel this is a type of a transformation in the Indian industry, Indian companies,
Yes,
because we
yes.
largely evident only dividend paying companies, but slowly we are moving from the culture of dividend paying to stock buyback, so which is a long term affair. But is it true in case of Indian companies, this concept of cash trust?
Let
How many
me
Indian companies will really will accept this?
fine. So to answer your question, let me take some time to explain this part. Very, very interesting question you have asked, and it has a great linkage with not only with with this paper, but mostly when you do your research in the field of corporate finance, or you teach corporate finance in your colleges or universities. See, I'm just taking a liberty to talk about 10-15 minutes, slightly different from this existing structure. In corporate finance, when you are learning corporate finance, when you are teaching corporate finance, whenever you are doing a research, we have three major functions: the investment decision, the financing decision, and the dividend decision. So investment, financing decision, all are closely related to each other. Now, in the context of cash holding part, mostly we are linking it with the dividend decision. So when a company, how to link with this? If time permits, I can show you a matrix which is called dividend matrix. That matrix, it's not, I have not developed. I have borrowed from Professor Ashok Damodaran's class in NYU. So he explained this matrix nicely. That what is the cash position of the company, and as a shareholder, what should you do? What will be your interaction with the management when a company is holding more cash or when a company is holding less cash? So let me give you this example in this context. So Apple was holding huge amount of cash for a long time. When Steve Jobs was the chairperson, he clearly mentioned, clearly mentioned to his shareholders that I don't believe in dividend payment. So whatever profit we are making, that profit we want to reinvest in the business to develop new product, iPhone, iPad, iPod, whatever the new product. If we are able to develop new product, automatically be able to generate the market, we'll be creating value for the company, share price will go up, and automatically you'll be benefited through capital gains. So if you are the shareholder of Apple, do not expect dividend from me. I don't believe in dividend. I only believe in capital gain, means appreciation of share price. That was the clear cut, clear cut message from Steve Jobs to his shareholders. Interestingly, when Steve Jobs was the CEO of the company for a large number of years, Apple was making huge amount of profit but didn't disclose any dividend. And shareholders were cool. They were very fantastic. They were okay. Fine. Whatever you are doing, we are okay with this. Why they were okay? Because Steve Jobs was able to invest into new R&D, research and development, and gradually he actually developed new product, and the company was benefited in terms of capital gain, share prices increased. What happened after demise of Steve Jobs? Tim Cook took charge. When Tim Cook took charge, he was following the same policy just like Steve Jobs. That I don't believe in dividend payment. So whatever be our profit, we want to reinvest in the business. In case of R&D, we want to develop new product, and automatically will be benefited as shareholders. So don't expect dividend from us. Now, at this point of time, under Tim Cook, unfortunately, Apple for a long time was not able to develop new products. Since Apple was not able to develop new products, and Apple, the share price of the company was also not increased for a long period of time, then shareholders created a pressure. They came together, led by a major shareholder, and they created pressure on Tim Cook that why are you holding so much amount of cash? You are holding cash because of one reason. Simple logic is that if you think from corporate finance point of view, that I have excess cash, I should hold that excess cash as long as I can invest in good projects. Good project means projects from where I am generating positive NPV or IRR is more than cost of capital, whatever you are doing. So if you have good projects, you don't pay more and more dividend, you invest in those good projects. But if you do not have good projects, then don't hold cash idle. It's the money of the shareholders, return it to the shareholders. Since Apple was not able to develop new products for a long time and share price was also not increasing, so they created a pressure on Tim Cook that you have to go for buyback or you have to give more and more dividend. Now, Tim Cook faced a severe problem on that point of time. He said, I don't have any cash with me. How come? Apple was a very cash-rich company. Apple is a very cash-rich company. Then Tim Cook explained that, look, we are a cash-rich company, but cash is not in California. California is the headquarters possibly of Apple. Most of the cash, majority of the cash, they actually parked in Ireland. In most of their R&D divisions are in Ireland. Why in Ireland? Because of the tax policy. Ireland has a tax policy that if your headquarters is in some other country, then you don't have to pay tax here. But US has a policy that if you hold your R&D and generate revenue, if you continue R&D expenditure, generate revenue, everything in some other country, then you don't have to pay cash to US. So for a long time, starting from Steve Jobs to Tim Cook, Apple did not pay a huge amount of tax, not illegal, legally, neither to the US government nor to the Ireland government. So they saved huge amount of tax. Fine, that's why cash rich company, not paying dividend at the same time not paying tax for a long period of time. So they had huge amount of cash. Now when shareholders created the pressure, then Apple said that Tim Cook said, if I want to bring my cash back to US, I have to pay 35% repatriation tax. So one third of my cash will go. But the pressure was so severe that the shareholders were ready. Okay, we are ready to sacrifice one third, bring those cash back to US and pay us more and more dividend. And Tim Cook was forced to bring back huge amount of cash to US, give liberal dividends, and then they had gone for buyback. Now come to the buyback part. In case of buyback, if you see that returning surplus cash to the shareholders, sometimes companies do not go for dividend, they go for buyback. If you see the if you see the global context, buyback was first introduced in 1960s in US companies, and by 80s it was very much popular. If you see the trend of US companies' corporate payout policy, those who are working in the dividend field, you'll find that if I take from 80s to 2098, especially the cutoff year, dividend was higher than buyback. But 1998 onward, buyback is more than dividend. So more and more Indian companies, more and more US companies, They are returning surplus cash to the shareholders through buyback and less through dividend because of so many benefits. I am not going into that. So it's called a substitution hypothesis. In case of corporate payout policy, there is a famous paper, dividend and buyback substitution hypothesis. So dividend is being substituted by buyback or share repurchase. In US, we call it share repurchase. So share repurchase has increased more. If you come back to Indian context, you will find that just like Infosys, there are many cash-rich companies. And those cash-rich companies, what are you, naturally question will come that what are you doing with this use cash? Either you are going for acquisition or you are investing in new projects, or if you do not have any such projects, return to the shareholders in the form of dividend. But the companies are not willing to pay more dividend. Now, generally, why companies do not pay more and more dividend? Because there are hundred odds bad reasons to pay dividend. You should not pay more and more dividend. There are many logic behind that. Excluding the last finance budget, dividend tax has been the highest compared to capital gain tax. If you see the dividend distribution tax in Indian context, indirectly it was 20%, 21 something. So as a shareholder, your money is directly going 20% to the government when the company is paying dividend. You can say under dividend distribution tax, I hope you are aware of this fact, to briefly mention that when a company is paying dividend under the regime of dividend distribution tax or corporate dividend tax, first 20% has to be paid to the government as tax. So if you have 100 crores, it comes down to 80 crores. Then this 80 crores, the company is giving to the shareholders. Now, shareholders will not have to pay the dividend tax. Now, apparently you can think, okay, it's tax-free to me, but it's not tax-free. This 20% tax the company has given to the government on your behalf. So it's your money only. So dividend, by and large, it's very much tax disadvantageous position. In the current year only, last finance budget, dividend tax has been abolished. Possibly you are aware of this. She abolished the dividend distribution tax in the last finance budget. Then also, if you are the wealthy investors, if you are holding huge amount of cash, you have to pay dividend tax as per your tax slab. Now, what is the highest tax slab? In India, highest tax slab is as high as 43% at present. So wealthy investors, large investors, they don't like dividend. Only small investors or medium-sized investors, they want to get more and more dividend. But if you go for buyback, see, in case of dividend, possibly it's a very fundamental part, you know very well in corporate finance. Companies or CFOs all over the world, they try to follow a stable dividend policy. They don't want to fluctuate more and more. So if Infosys has more amount of cash and one fine year they are paying more dividend and next year they are coming back to the previous level, automatically there may be a doubt in the minds of the shareholders. What happened last year? Infosys gave so much amount of dividend. This year again it's coming down. Maybe the company is not doing well, so on and so forth. So no CFOs want to take the risk of fluctuating the dividend. They want to maintain a stable dividend policy. So if you have excess cash they prefer to return to the shareholders with the help of share buyback or stock buyback or share repurchase. And indirectly you get some benefits also in case of stock repurchase, share price improves, so on and so forth. So if you see the distribution, the dividend payment behavior, interestingly, it's one of my focused research area. If you see the substitution hypothesis in US, in Canada also, the buyback is more popular than dividend. Most of the companies and majority of the person, they go for buyback or share repurchase. If you see Indian context, then share buyback has been extremely increasing, you can say. More and more companies are going for buyback. Last 2 years back only TCS spent 18,000 crores on buyback. Infosys, every alternate year, they spend more or less 10,000 crores on buyback last 2-3 years. So buyback is increasing. But still, if you see the macro picture in the Indian context, if 100 rupees is the total payout, maybe 2 to 3 rupees buyback, 98 rupees dividend. So Infosys is a unique case, cash-rich company. TCS may be a unique case, cash-rich company. Coal India may be a unique case, cash-rich company. You will find that this kind of companies, they go for buyback, mostly cash-rich companies. But if you see the whole Indian companies, the market as a whole, then dividend dominates. I can say 97 to 98% dividend. As per my last research, based on, I can say almost 2,000 companies. Recent. I'm working on that. You can see almost 2,000 listed companies I have taken And here I found that dividend is prominent in India, buyback is very small. But if you see some selective companies, then buyback is increasing. Now again question comes that if the companies are not paying dividend, obviously some shareholders will create pressure. If you're a large shareholder, you can always create a pressure. If you're a small shareholder, no matter how much is the number, it will not affect the company. So what I'm trying to say is that in respect of dividend and buyback, simple sense is that if you are a company, if you have excess cash, that excess cash, if you are holding, then you have to earn that trust. Why I am holding and what I am trying to do is that. If you can earn that trust, well and good. When you are unable to earn that trust, then you have to return to the shareholders in the form of dividend or in the form of buyback. Otherwise, shareholders will definitely create pressure on you. Okay, the Apple case that I talked about. Similarly, there's some other picture in Indian context. The corporate world is something different. You have to understand there are some large cash-rich PSUs, be it Coal India, be it MMTC, be it Indian Oil, be it Garden District Builders. You will find that they are all cash-rich Namaratna Maharatna companies. They are not facing this problem. Shareholders are not creating any pressure. Sometimes finance minister creates pressure that if you have huge amount of cash, you pay more dividend or go for buyback. So Coal India suddenly disclose they go for buyback or they go for let's say dividend, and majority of the dividend is coming to government, or the buyback also is coming to the government. So that's the scenario. I'm giving you one example how cash rich companies behave. There is a company headquartered in Calcutta. Calcutta I am saying because it's a 100 years old company. Garden Ridge Shipbuilders Engineers Limited. Garden Ridge. So possibly you heard the name. Garden Ridge is the largest ship manufacturing company in India. Government of India owned companies. So I was taking the management development sessions of those companies, finance as well as non-management executives. And naturally, we know that when you talk about the top line growth of a company, we focus most on revenue from operations. We do not give much importance on other income. So I mentioned that don't give much importance on other income, rather you give more importance on top your revenue from operations. Now, one executive, he clearly mentioned that no, sir, other income is a significant part of our business. Why should we ignore? It's roughly 20 to 20%, 20 to 22% is coming. Then I thoroughly went through the annual report of the company, and I found in the annual report, the very important part is the other income. And if you go to the other income details, from where they are getting other income, I found that mostly interest on fixed deposits. Now see the important part. I asked, why are you parking so much money in fixed deposits? They're saying we are not parking money. Mainly we are manufacturing ships on behalf of Indian Navy. So what we have, since we are into construction contract, ship manufacturing, so we have a tie-up with Indian Navy. Indian Navy gives us the advance money, always. So when you get the advance money, this advance money we park in the fixed deposit of public sector banks. And we get huge amount of, 5,000, 6,000, even 8,000 crores of interest only. The huge amount of interest we are getting that comes from other income. Now the question is, you cannot afford this luxury if you are in a competitive business. You cannot afford that luxury if you are in a private sector, because if you are holding your cash in a bank account, it's giving nearly 5%, 6%, 7%, whatever return. Private companies cannot afford to do that. They will have to invest somewhere, otherwise they will have to return to the shareholders. But government-owned companies, they won't face this kind of challenge, because they are not that much market linked in that case. They will not face this pressure. If government needs more money for disinvestment policy, government will create a pressure on them that pay more dividend or go for buyback. Then they will get the money. So in the whole scenario, if you see the cash trust nexus, mostly IT companies, FMCG companies, some of the companies, not all, some of the companies which are really cash rich, they hold the cash, because if you want to invest in a good project, because the IT companies are high technology companies, all are equity finance, not debt finance. For R&D financing, you should not take debt, and you do not take debt. Info is a debt-free company. TCS is almost nearly debt-free company. Wipro is also almost debt-free company, small amount of debt. So they rely only on cash balance. Okay, so they don't want to pay more and more dividend always. They want to keep a cash because if we want to invest in R&D for future growth, we need to hold the cash. So as a shareholder, individually, if you're a small and medium-sized shareholder, you may love dividend, but the majority of the shareholders, the owners, the promoters, and the large institutional investors, they don't like dividend. They prefer capital gain or appreciation. That is the scenario of cash holding. But yes, if you are holding more and more cash, there is a question mark also. What are you doing with this cash? As long as you can justify to the shareholders, as long you can satisfy the shareholders, it's fine. But whenever you are unable to satisfy the shareholders with proper financial data, with proper financial results, then pressure will come on you, just like Tim Cook, to return surplus cash to the shareholders. Could I answer your question regarding this cash holding part?
Definitely, sir. In right direction. I got it. Thank you, sir.
Now,
Thank you very much.
Now, this is the cash holding part. The Apple one that I have mentioned. Similar thing happened with Microsoft also. For a long, Microsoft went for buyback after a long period of time. I'm giving you one more interesting example. Sometimes, always we are talking about that companies have huge cash, they are not giving dividend to the shareholders. There is opposite picture also. There is a company which used to borrow fund and pay dividend to the shareholders for a long time. Can you name the company? British Petroleum. British Petroleum, systematically they used to borrow fund, and they believe that when we are paying more dividend to the shareholders, shareholders will be happy. Now see the danger. So they followed for a long period of time. Somehow in this way or that way they managed to pay more and more dividend. But after a certain point of time, it's not sustainable. So the British Petroleum was forced to cut the dividend. Compared to last few years, they forced to cut the dividend. And just for cutting the rate of dividend, the pressure from the shareholders was so high that the chairman had to resign from his post. And then he disclosed that so far we have been paying dividend by borrowing cash. So actually free cash flow was negative. Still the company was paying more and more dividend. So paying more dividend may not be a good decision always. We have to understand the context part always. Anyways, so let me come to this part. This is the cash holding part that we have talked about. So when a company is holding more cash, more and more cash, obviously shareholders were thinking that whether are you giving us the right information, correct information, that what are you trying to do with this cash. As long as you can justify, well and good. And when you are unable to justify, then obviously pressure will come on you to return surplus cash to the shareholders. Now, the next part is talking about the readability part, the readability of financial statements. Now, readability, if you see, the term readability means, suppose I am giving a statement, chairman statement, or management discussion analysis. Giving a statement is not adequate. How I am writing that statement is very important. So sometimes some text is very easy to read and easy to understand, whereas some other texts, it's written well, but somehow not very easy to understand. So confusing part. So if you see the readability part, it was first used in reading index. Originally, it's based on the primary school assessments. So when primary students are reading any book, are they able to understand according to their knowledge, according to their age, according to their education? So if a 10-year-old student is reading a particular book, primary book, whether he or she will be able to understand this or not. Or that book, if you give it to the 4-year-old student or 5-year student, that may be difficult to understand for that particular student. So from understanding point of view, readability index was first introduced for the primary school assessments long back. That is not the new thing, long back. But in this context, in accounting and finance research, this has been used very recently. If you see in the in the corporate context, you will see the readability, the impetus or the focus of streamlining the annual disclosures and the textual readability was first introduced by SEC, Securities and Exchange Commission in US in 1998, plain English mandate. So they have given a plain English mandate that you have to disclose, not only giving the information important, but you should give information in such a way that even a lay person can understand what is going on, what has actually happened. So that is mainly to protect the interest of the investors, that they can, by reading the annual report, by reading your text, I can understand what are you trying to say. Don't try to hide something. That was first mentioned. Now, the relation between readability and financial disclosures and obviously earnings management explored by very small number of literature. Agina et al. Is one of the very prominent. He published his paper in Journal of Accounting and Economics, which is an FT50 A-star journal, and similarly the law. So very recent studies. These are very recent studies which have explored this readability of the financial statements in the context of earnings management. Okay. Now, here, in case of readability, what I am trying to mention here is that look at this part, the Kingfisher. If you look at Kingfisher Airlines 2012 fourth quarter report, you will find that the company actually incurred operating loss. Okay, but also the company highlighted different types of positive news in a very well highlighted bullet print. So company, in a bullet point, company highlighted the good things, and the bad overall picture is operating loss. But the company wanted to disclose mostly the good things. That's one kind of, you are trying to confuse the investors, the readers. They are unable to understand properly. So if you see in this kind of scenario, you'll find that evidence suggests that managers of firms with performance worse than benchmark make disclosures less readable as compared to better than benchmark performance. Means what we call it obfuscation theory. Means it's very difficult for me to say I am bad, but it's easier for me to say I am good. So when I have good information, I proudly explain and I proudly disclose very clearly. But when my performance is lower than expected, lower than benchmark, I'm trying to make my language more complicated so that you are not able to understand properly. That's the readability part. Now, if you see the readability part in this context, if you see this tagline, uh, without proper disclosure, investors would be unable to make informed decisions. They would not know about the financial condition of the company they are investing in, nor would they know about how the company operates, who its board members are, or what business, operational, or financial risk the company faces, let alone may face in the future. So, what is actually happening in the company, that we should know. Otherwise, there is no question of readability. So, readability means you have to very clearly, you have to give the information in a very simple language. So how to go ahead with this? In the context of readability part, I am not going for much of the literature, only some of the literatures I will highlight the readability part. I am selective literatures. For instance, Bloomfield 2002, if you see, they find that more complex and lengthy disclosures result in less trading as cost of extracting information becomes higher. Thus, obfuscating information actually incentivizes managers when the firm performs badly. Means whenever your performance is not so good or lower than benchmark, you try to confuse the investors, obfuscate, not giving wrong information, but you are giving the information in such a way that investors are unable to understand properly. So Lee in 2008 paper, they what they mentioned that loss-making companies with less persistent earnings use complex narratives. They use complex languages in their MDA. But when their performance is good, they use very simple language. So the complex narratives they are using to ensure that their poor performance is hidden. They try to hide their poor performance. That's the part. And in Bloomsbury 2008 paper also, they talked about the obfuscation theory and ontological reasoning. Obfuscation part is the last part that I have mentioned. It's the most prominent theory in the context of this readability in an earnings management. Obfuscation, on the other hand, suggests that managers often use complex text to cover up the negative performance. And ontology is indicative of the fact that negative news is intrinsically hard to convey. So simple thing is that if I am doing well, if I am performing well, I proudly explain in simple language. But when I am not doing well, I try to hide. I try to use, not I am not giving you wrong information. I am not lying you, but I am trying to use difficult narratives so that it becomes difficult for the investors to understand. Okay, that's the main part here. Now, in this context, if you talk about the readability part, Low et al. And Lees 2008, these are two prominent recent papers. They used the management discussion analysis part, MDA segment of the annual report. So MDA part, as you know, that top management's thinking about what the company is doing, future of the company, those are actually reflected in director's report and MDA report, management discussion analysis. So they consider that why don't you see the MDA report, how they are disclosing things in MDA report, and make analysis that which companies which do not manage earnings, what kind of what kind of MDA they are reporting. I mean, how easy MDA they are reporting, and companies which are managing earnings, are they trying to make MDA very difficult, very complex? That is the main part. So here, if you see in this context, that so far we have been focusing on the quantitative data. If you see quantitative data, prior studies suggest that quantitative data primarily focuses on the past performance, what happened earlier. But textual data throws light on the firm's expectations, future expectations, strategies, and risk and other prospects. That's why if you want to look at the future, then not only then qualitative data becomes more important, or rather you can say textual data becomes more important. Okay, that's why nowadays a lot of focus has come on the textual data part. In case of MDA part, already we have mentioned that in case of Indian companies also, they a part of their annual report, they disclose MDA to express the view of the top management about the happenings of the company and the future of the company. Now, focus of the study, what we are trying to do is there. So here it's important that what is the main focus that you are planning to do in your study is very important. Novelty in your contribution is vital. So what is the new thing you are contributing to the literature is always vital here. So if you are seeing that, to the best of our knowledge, no study as of now investigate the moderating role of cash holdings in explaining readability of firms from any emerging nation that involve earnings management practice. So earnings management practice and the readability, this kind of paper you will find very few, mostly in some developed economies. In emerging economies, you will not find. But recently, one paper is published on earnings management and financial readability, okay, in the Indian context, but not on the cash holding part. So here also I mentioned that this particular area itself is unique. But if you find that already some existing papers are there, then what is your distinguishing factor that you have to highlight, which is the behavior of cash holdings of the company. Now, here I am not going to talk about this part much. Already we have discussed the annual report, MDA segment, the literature part we have mentioned. Yeah, some of the literature that we have mentioned. I am not going much on this part. Okay, disclosure part, similar thing. Essay et al. If you said that positive news disclosures are more readable than negative news. So positive news you disclose more clearly, more easily than the negative news and all. So you have to find out the gap, what research gap we have. So here there's a research gap in the literature that explores the relation between earnings management and readability in emerging countries like India. So a lot of focus you have to give on your research gap, as we discussed earlier. MDA part already we have discussed, and also the research gap in this context when you are involving cash holdings and readability part, okay, in emerging countries like India. So I'll come up, I'll try to briefly discuss about these main two research questions. One is what is the influence of accrual based earnings management in the context of Indian companies, okay, that just beat or meet beat prior year expectations in earnings, or what is the role of the cash holding in this case. These are two important things, research questions. I'll come up about the methodology part. So before I come for the methodology part, we have half an hour more possibly. Yes, that is fine. Any questions so far to set the tone of this particular topic, that we want to understand that whether The readability of financial statements have any role in the context of earnings management. Means companies which manage earnings, do they make their MDA more difficult, or there is no such case? That is the main focus. Means when I am managing earnings, I am trying to make my MDA, the reporting part, more complex, more difficult. Or maybe I am not doing so. I am clearly reporting all these things. That is our main research question. Okay, this is the readability of the financial statements. Any questions so far before we go for the empirical design of the paper?
So I have a question. Are the objectives and research question the same thing?
That you can say. Same thing. See, research question means research questions you are asking. Sometimes some journals they use the term research questions. Sometimes they use the you should have a different section called objectives. But primarily, this is my research question, and this is what I am trying to achieve. That's the objective. That you can say.
Thank you, sir.
Any other?
Professor Chatterjee, if can I add a thing in addition to what you said
Sure,
to
sure, sure.
Rina ma'am raised a question. Ma'am, with my limited potential, what I would like to tell you is research question is the broad, is the broad perspective. So research question is, say, the one-liner that what you are doing with regard to your study, what you want to achieve. Whereas in order to address the research question is you break them down into smaller objectives. That much I can
Okay,
add.
thank you, sir. Thank you, sir.
Yeah,
Sometimes research question you can explain within the introduction or part,
exactly.
within the introduction part. But if there are
Professor
some
Chatterjee, can we add it like this, that for journal articles, the research question and the, because that is one small article, over there the objective becomes very close. Whereas for a thesis, the research question is one or two, whereas it is addressed through a number of objectives, 5-6 objectives.
yes, research objectives are coming from research question
From the
only.
research question. So research
Broad
question is
aspect,
brief question, what I am checking,
yes,
one-liner,
broad aspect is same.
the
Now it
research question.
depends on how you report, how you write. In some
Exactly.
journals, you should have an objective section. In some journals, there is no such guideline. So you do not have to go for objective section. In the introduction part only, this is the research question which you are trying to address. And whenever you are writing thesis, obviously then step by step, first objective, second objective, third objective, fourth objective. In this way, you have to proceed. But broadly, these are coming from the same aspect. Okay, according, as Professor Mukherjee has mentioned, according to the requirement, you project this thing. Okay. Okay. Now let me come to this readability part once again. Yeah. Now here the research design part is very simple. If you see, this is the readability measure. I will take one readability measure, and I'm trying to set a regression, which is beta 1 into beta 1 of earnings management. EM means earnings management. Then beta J's would be control variables. So one is earnings management variables, second is control variables, error term. Similarly, in the second case, it's same. Only I am using cash holdings as a moderating variables. Okay, as moderating variables. That is the main part. I am just addressing this readability. Now, question comes, if you talk about the readability, what measure you are going to use? There are different number of measures which use readability. Here we have used three major important models, which measures for the purpose of readability. Now, one is called Gunning Fog Index. Fog Index. It was developed in 1952. So here for the fog index, there is an established formula 0.4 into average number of words per sentence plus percentage of complex words, where you will be getting this in case of fog index. Now suppose where the words containing 3 or more syllables we call complex. Suppose, what do you mean by complex words? So this part, this formula I have mentioned, but we cannot do it manually because you cannot read an MDA of 100 companies and find out what are the complex. Suppose corporation. So it's a complex word, but corporation is a very simple word also, so very subjective. So generally, when 3 or more syllables are used, we call them complex word, as per this fog index discussion and the entire readability part. Now, suppose fog index is coming 4. It means if you have fourth standard of education, fourth standard means, let's say, primary, class 1, class 2, class 3. Suppose I'm saying in Indian context. So if you have up to this level of education, then you should understand. But suppose fog index is 6, but you have education up to fourth standard, then you will not be able to understand the meaning of that particular text. So in this way, fog index was developed. Very interesting, as I said, it was first used for primary school students to understand the readability of the text, whether the text that we are writing, the kids or the children are able to understand or not. So fog index, you cannot do it manually because number of complex word, number of sentence, number of word, average word, not possible. So what you can do is that there is a dictionary in R software. I have used R. There may be some other softwares also you can do that. In R, there is a dictionary, the linguistic dictionary. Within this linguistic dictionary, there are certain codes you have to run, and you can get the variable very clearly. So you have to write the code, upload the MDA report, and automatically will be getting the fog index 4.6 or 9.2, whatever fog index will be getting. So please note that you have to learn this particular code for the purpose of calculation of fog index. It's not manual. You'll not be able to do it through. I'm not sure whether it's possible, whether it's done through SPSS or other reviews and all. I'm not sure, but through R you can do it through linguistic dictionary. That is the fog index. Apart from fog is very popular in this context. There is second is called Flesch-Kincaid index. Flesch-Kincaid index, here also the formula is given to you. Flesch-Kincaid means 11.8 into syllables per word plus 0.39 into words per sentence minus 15.59. Don't focus much on this formula. Customarily you have to mention this that much. But here also by running the code in R you can get it. And Flesch-Kincaid index, if you search in your Word file, it's inbuilt. In Word file also, Flesch-Kincaid index can be computed very easily. If you search your Word file, upload any data, you can get it from Flesch-Kincaid. So you can do it either in Word file or through our software. So one is fog, second is Flesch-Kincaid, and third is called smog index. The smog index you can also do by using this formula with the R software. So we have to know this particular the calculation of this readability indexes. Meaning is same. If the value is 6, means you should have up to 6 standard of formal education to understand this text, otherwise not. Okay. So fog, smog, and the Flesch-Kincaid, these are the 3 measures of readability. Now here one thing I would like to mention, whenever you are using these indexes, fog, smog, or Flesch-Kincaid, there are other different measures also. So needless to mention, you have to justify why are you using these 3, why not something else. So you have to justify that these are the most prominent one published in the literature, widely accepted, widely used in the literature. That's why we have used so and so models. Okay. Earnings management, how to calculate, already we have discussed preliminary in the last session, that either you can use Raman and Sarul model, that is modified Jones model, or you can use Raman and Sarul model for the purpose of robustness check. Okay. Now, for earnings management proxies, here compared to earlier, here we have used a different method. In a low paper, it was mentioned, so it's something different. Something different means we have used 3 different variables for earnings management. Let me explain this. So we compute earnings management in multiple ways. The first one is a time variable, which is called MBE. MBE means meet or beat expectation. MBE, meet or beat expectations. So analysts have the expectation, either you meet that expectation or you beat that expectation. So based on that, you create a dummy variable. Okay. And this dummy variable will be created based on your change in EPS compared to last year EPS, current year EPS. You find out delta EPS change. If that change is in between 0 to 1%, you call it MBE1. If that change is in between 0 to 2%, you call it MBE2. And if that change is between 0 to 3%, you call it MBE3. So meet or beat expectation, level 1, level 2, level 3. This is the first one. Okay. That is one. Directly we have not used discretionary networks. In that case, we are doing in respect of EPS. That is one measure of earnings management. Second is, the second one we have used, that DA, discretionary accrual. The second and third measures are based on the discretionary accruals, as we have talked about in the last case. Okay, discretionary accruals. Now, discretionary accrual, how we have used? Again, we have taken as a time variable that positive earnings management. If the earnings means DA is positive, then we are taking value 1. If negative, then you are taking 0. Because when DA is positive, it's called upward earnings management. When DA is negative, it's called downward earnings management. So you create a time variable 1, 0. Second, positive or negative fine, but how much positive, how much negative. So you call high positive. So third method is high positive earnings. High pos EM means high positive earnings management. So it carries value 1 if the value of DA is higher than or equals to your median value. So if it is more than median, you call it 1. If it is less than that, you call it 0. So 3 measures we have taken. One is your MBE, which has 3 levels, 1, 2, 3. Second is positive earnings management, and third is high positive earnings management. And then we try to interact with each other, interaction variables. We try to interact with one another. Okay. So this is the variable we have taken. Then what is the data? In brief, I would like to take the questions because research design part is more important. Findings will vary according to your data and all. Research design, you will find that we have taken NSC 500 farms 2014 to 20, and finally we got 1183 farm year observation, 1183 farm year MBAs. Okay, for 384 Indian farms, and these data are taken from the CompuStat WRDS CompuStat database. Okay, CompuStat database from where we have taken this MDS. MDS are available in Prio's database also. If you want, you can get from there also. Now, this is the empirical findings part. Empirical findings, very simply, I am trying to mention. First, you explain the descriptive statistics. I am not going into that part. Then you show the correlation matrix and the VIF part to reflect your multicollinearity. This is the customary part. I am not going into that. Yeah. So measure 1 fog, measure 2 flesh kinkit, measure 3 smog index. This details part I am not going because obviously it's not that you'll be working only on that paper. You can work on other data also. Simply what you find, if you take MBE1, MBE2, MBE3, meet or beat expectation, you find all the variables are significant under all the measures. Under all the most of the measures, this is not significant in the third case. When you go for positive earnings management, then you are not getting most of the variables significant in most of the in fog and flesh kinkit. But when you interact, this is what I want to highlight. When you interact positive earnings management with MB 1, 2, 3, then this interaction term is getting reflected and you are getting the significant values under all the measures. This is the first part, MBE. So positive BM is the measurement. In the second case, what I said, not positive, but high positive BM. So here also finding is same. When you interact, you are getting the variables similar. Okay. So if you look at the brief results are like this. This is the MBA. This is the first part. 4, 5, I have mentioned 4 positive BM, 5 high positive BM. Table 6 talks about the cash holding part. Same pattern. We have introduced cash holding, then we have interacted these things. And again, cash holding is interacted with the high positive or negative. So this result part I am not discussing much. Only certain things I am mentioning here. Just have a look at this. Because explanation of results are not important. You can always do your work in your own context. So broadly you find that, just a minute, sorry. Yeah, table 4. When we interact positive earnings management and high positive earnings management with MB 1, 2, 3, the combinations exhibit positive associations. So overall what we find, that firms which meet or just beat the prior year EPS, means the expectation, and manage earnings, they make their MDS more complex. And this finding is similar to Low et al. Paper also. So US companies, whatever is their pattern, Indian companies also are getting the similar pattern in the context of earnings management and the disclosure. In the second case, what you are getting, that while considering the cash holdings, what we are getting, that interaction terms are significant in most of the cases, and the results what we are getting, that results indicates Firms that hold higher amount of cash and firms which meet or beat expectation, they also manage earnings and made their complex MDA more complex. Now, what I'm trying to say is that since in a small point of time we are discussing these parts, I'll be sharing the presentation with you in case you are interested. That's not a big deal. What is important thing is that in this case, the earnings management part, in the first part we have talked about earnings management and different types of governance variable. Here we are focusing on the textual disclosure, how companies are reporting things in their MD, management discussion analysis. So first you understand the textual disclosure first, try to understand the readability of those financial statements by using FOG index, SMOG index. There is another index called Flesk Kinkade. BOG index is also there. Using those indexes, whenever you are extracting textual data, and those textual data you are linking with earnings management, whatever be your model, not necessary that the model which I am explaining is the best model. There can be different combinations, there can be different variables, you can always innovate. But thing is that whenever you are linking earnings management with the textual data, it's something new that you are getting, that not only you are relying on the quantitative data, we are trying to understand the qualitative data, what they are reporting part. And from the reporting part, we are trying to understand that companies which manage earnings, do they make their MDA reporting difficult, or they don't do such things? In the US context, we have seen that yes, the companies which manage earnings, they make their financial statements reporting difficult, MDA difficult. And similar picture we are getting in the Indian context also. Whenever you are using cash holding, then also you are getting, yes, cash holding is the determining factor in this case. And accordingly, you need to take your conclusions and policy implications in this context. So on the whole analysis, in the second part, what I am trying to say is that if you compare the first part and second part, the chances of acceptability in a good journal is significantly higher in the second case compared to the first case, because first case was nothing but repetitive work, only some innovative things I have introduced. So if you introduce it, it will be published, but nothing great about the first part. But the second part, when you work on the textual data, it will help you a lot. I'm giving you a few more examples where textual data can be more prevalent. I am not sure whether papers like this have been published or not, or it may be published in future. Other people are also working on that area. Suppose if you see there is something called call transcript. Call transcript means this is not my idea. This is one of my colleague who is teaching at IIM Calcutta, Professor Sumit Paul. He shared this idea with me, and I thought it's very important. Why not work on that area? So let's see if we can work out. If you want, you can also work on that area. Call transcript means when companies disclose their earnings, they hold a press meet, business press meet I'm talking about. Suppose Infosys is reporting its earnings and chairman is giving a speech. So look at the chairman's speech. Completely 10 minutes, 15 minutes, sometimes half an hour. Half an hour is too long, maybe 10, 15 minutes. So maybe 3-4 pages PDF report you'll be getting from Private only. From Private, there are many important documents which are available, generally we overlook. So that PDF statement of the chairman's statement will be getting. Now you see, the day on which the chairman is giving the speech about the earnings, that compared to last quarter, this quarter earnings has increased or declined or marginally increased or significantly increased, whatever. So on that date, if you take this as an event date, that is the date, and you measure the performance of the stock, share price of the company, and that performance you link with the textual disclosure of the company. So what kind of textual disclosure the chairman is giving? Is he or she talking about the positive news, or is he or she talking about the negative news? Sometimes what kind of tone? Tone is more past oriented or tone is more future oriented? The tone is more, what do I say, expectation more and more, or they are saying we have delivered so and so good things. So what kind of tone, the positive tone or negative tone the chairman is speaking about, that plays an important role, and you can capture those things very nicely. There is a software, maybe you are aware of this software called LIWC, linguistic English, what I don't remember the full LIWC software. So with this software, if you upload that PDF file, they will give you the tone, how many words they have used, how many complex words they have used. Tone is past oriented or future oriented. Tone is negative or tone is positive. So this kind of text, whenever you're using something new, unique, the chances of acceptability will be high. Similarly, generally we look at the CSRs, those who are working in corporate social responsibility, CSR reporting and farm performance. Very old topic, several works have been done. But why don't you check the CSR report? Look at the CSR report of the company, look at their textual data, find out this textual data, and then you link with the performance of the company. Something new you will be getting. Similarly, you can take the chairman's speech, you can take the director's speech. Since last session we talked about the board of directors, unfortunately we do not have this luxury, we cannot get this kind of data. There are certain papers in Harvard Business Review where board members, when they are holding board meeting, they are looking at the video, they are recording this entire board meeting. Suppose there are 10 or 15 board members are sitting, and the researcher, either he or she is sitting on the board meeting and he is watching external, he is watching the expressions of different directors. Good news, what kind of financially good news, how the finance director is giving his or her expression, or marketing director, what kind of expression he or she is giving. So looking at the expressions, looking at the financial results, if you look at those videos, if you, in our software also, you can convert those videos into certain type of data, positive, negative, and then you link those kind of data for the purpose of your study in board governance or corporate governance. But in Indian context, nobody will allow you to sit on the board meeting, not possible also so far. But those are innovative things which you can use as far as possible. The chances of doing good research and chances of accepting in top level journals will be high. That is my limited understanding. But instead of doing any kind of repeated thing, if you can develop something new, that will be of more, more useful. That will be more useful in this context. So these are some of the results. I am not discussing the results, about results already we have discussed. And then you can link with the policy implications and all these things, as I have mentioned, that whatever is your findings, how your findings are linked to policy implications, because policy implications are very important and contribution to the theory is also important. Okay, so this is the thing which I thought I should share with you, because I am not at all an expert in this field. I am also trying to understand how to work on that particular field. Now, please, questions. If you have any query, we can discuss the questions. We have 15 more minutes. Yeah, please.
Yes,
Hello.
participants, so we have 15 more minutes, so we can
Sir,
have a round of discussion.
sir,
Yes, sir, go ahead.
sir, you are talking about negative note. Can we say that negative note is a risk matter, risk area related?
Negative means tone. I'm saying tone. Tone means generally that, okay, last year, suppose I'm just hypothetically saying, last few years we have been doing well, but due to COVID situation, we have not been able to perform. So we are facing challenges. That's why our operating profit has come down. These are negative tones. Positive tones, we can say, despite the COVID challenge, we could maintain our revenue, we could maintain our profit, and we are doing well. Positive tone. So what kind of tone that you can identify? See, when you read the language, because we are not getting the videos, you will, videos are possible if you have that kind of database. We don't have the access to those database, but we are just reading a PDF file. So if you go give that PDF file, they will, the software will read the PDF file and they will try to understand the tone of that language, tone of the words that they have been using. So how many positive words they have been using? Fantastic, improving, increasing, hopeful. So those are what? Positive. But disappointing, not so good. We are trying our best. Those are not so good. So the software will tell you that these are the positive words they have used. These are the negative words he or she has used. So based on that, we can identify, because we have to rely on the software and rely on the speech. But yes, negative means yes, risk part is a part of a negative thing. Obviously, you can mention this.
Sir, there is one research on corporate risk disclosure part, how the company reporting risks matter. They also saying the positive, negative word as
Yes.
there's some researcher counting the word, a negative word through the software, or some are sentence counting. How they are different from your means tone point of view? Because
No.
I am researching on that topic, risk reporting part.
Risk reporting you are doing. So which software you are using and what kind of data you are getting, response you are getting.
Uh, I am using the annual report through the
Okay.
QDA minor light. Uh, is the free software I'm using. Otherwise, I just reading the sentence one by one through annual report. Uh, we don't have that much facility available in our means university, so that we limited the so reading the sentences. Otherwise, we use the QDA minor light on free software packages.
Which university you are from?
NIT Raurkela.
NIT Rourkela is NIT means obviously National Level Institute. Anyway, the software which you are using, I don't know. To be very honest,
QDA minor light.
I am not at all an expert. This work, okay, this readability index and all, I have not computed. My research scholar has computed, but I know the fundamentals to guide her. So if I want, I can do it. What I'm trying to say is that the readability part which you are working on that, there may be multiple softwares. You please take the help of people who are working in the information system, IT. So they,
Chanchal, if I may add, if you allow me, what he said, QDA Miner is basically a software which is used for qualitative research work.
okay,
Yes, sir.
So that
Yes,
is
sir.
what he is referring. There are
fine.
Yes, sir.
qualitative research softwares like NVivo, Atlas TI, QDA Miner. So QDA
Okay.
Miner is one such free software for qualitative research. Just to add to what you were
Fine.
discussing.
If you can find,
You
I
go
was
ahead.
not.
You go ahead.
Thank you, Abhi. I was not aware of this part. But if it fulfills your requirement, well and good. If it doesn't fulfill your requirement, more or less, you can do most of the things in R. If you know R well, um, most of this textual analysis you can do through R software. R is also free software. And but in case of R, you have to understand, you have
Yes,
to
okay, sir. Thank you.
develop the coding and all. Sometimes you can take help of others, but this kind of things, there is another software called LIWC. LIWC, linguistic some dictionary. I don't remember the full name. LIWC is very cheap, only $100. So roughly 7,000 rupees. Nothing. Even if the institute is not giving you, you can buy on your own. LIWC.
Yes, sir.
Okay.
Okay, sir.
So
Okay,
LIWC
sir.
is used for that purpose. LIWC is a good software.
I
Only
just
how many?
checked it on the internet. It is linguistic inquiry and word count.
Yes. Linguistic
I just
inquiry
checked
and
it on
word
the
count.
internet.
So
Yeah.
LIWC is a good software. You can always install in your department or individually also. It's very useful in this case. But yes, if you want to do it R, then obviously you can do even much more things.
Thank you, sir. Thank you.
Yeah. Any other question? No more query. So we have come to the end of this discussion. So overall, I thought these are some of the things which I can share with you all for the purpose of maybe we can learn from each other. That will be helpful. So thank you very much to all of you. Professor Mukherjee, if you
No,
can add.
it was really a very engrossing session. And from the responses and the questions which they are already research scholars or there are faculty members who are working on this area. And I'm sure that these variables, interesting variables which you have used in your study, that gives us a lot of confidence that how they can proceed. And most importantly, I must appreciate your effort in explaining that how a good research paper, a standard research paper of international standard can be proceeded with. What will be the thought process, more importantly. So thank you, Professor Chatterjee, for this wonderful session. And I can see responses in the chat box even. Dr. Jigar Rupani has stated that a wonderful session, sir. Learned so many new concepts. Yeah, these are the reasons why these kind of FDPs are encouraged in our country. And these are the reasons why we call the experts who have first-hand experience.
Right.
Thank you, Professor Mukherjee, for yeah. Someone is saying something.
Shalini ma'am, yeah.
Right, so it was, I just wanted to add that it was a wonderful session and very interactive. And like we got
Yeah.
to know a lot many new things which I was not even expecting. I was not even have heard some of the new things. So we have really, learned a lot, and a lot of food has been, like what sir normally says, a lot of food has been served for us. And definitely it's a great experience. Thank you so
Madam,
much.
I always believe that for us, the faculty members, food for thought is more important than food for the tummy.
Right, right.
Professor,
Absolutely.
Professor,
So that is why I have invited the best of the chefs. I know their culinary skills.